everyone, welcome back to UNC video channel. If you are new, welcome. If you are not, welcome back. Okay, today I'm going to do a video about sharing about my story. How did I actually get started into doing investment, both real estate investment and also stock investment. And over here I will also share with everyone how do I fare in each of this journey, whether did I fare better when it comes to real estate investment, or did I do better when it comes to stock investment, and what are the pitfalls that we should avoid. So this is what I'm going to share with everyone today in this video. So before we dive right into this video, I would appreciate if you guys can give me an early thumbs up, hit on the like button here, so that it can help the YouTube algorithm to reach out to more people, and it also means a lot to me and also to my channel. So who says that money is not important? Even though money is not everything, but without money there are a lot of things we cannot do, right? So to me, money is just a tool for me to get things that I want, okay? Provide a better living environment for my loved one, for my family members, be able to help others. We have to always first help ourselves before we can put ourselves in a position where we can help others. I do not worship money, but I would make money as a servant to actually serve us, because that's the purpose God makes money for, right? To serve us and not we serving money. Let me start by sharing with everyone how I actually get started into this property investment journey as well as stock investment journey. And I hope that, or whatever mistake that I have done for myself in each of these investment, you guys can also learn from it and avoid repeating the mistake that I've made, and become way better investors in both stock and real estate, and without having to repeat all those mistakes that I have made. Okay, let's start. So I decided that I would want myself to become rich, of course in the right way lah, through the right method. So that's when I actually invested myself in reading those books on how to invest in property, how to invest in stock market. So I remember that when I was still in Singapore, working in Singapore, I actually worked in Singapore for almost a decade, almost 10 years before I decided to come back to my hometown in Penang. So that's when I started my investment journey. I first started off in property. The first property that I invested in was under construction condo. That was the first condo in the whole mainland. Okay, so I always have the fantasy of being able to wake up in my own residence, and I can dip into the pool and swim in the pool, like those Hong Kong TVB's shows last time, where those the rich and the beautiful lady would always have a dip inside the pool and enjoy life while sipping on cocktail. So I had that picture in me that I want to do the same thing, So that when I saw a signboard, advertising for the first condominium in the whole mainland, I decided that I must, this condo comes with swimming pool, I want to buy it. So I didn't buy it with the mindset that I want to invest. I just buy it that I want to fulfill the picture that I have in my mind last time while watching the TVB shows, that I want to be able to dip into the pool, okay, at the residence that I stay in. So my real investment journey started after I came back from Singapore to my hometown in Penang, mainland. So when I came back, there was a gap where I have to look for a job. So looking for a job wasn't that easy, because due to my past experience, I was doing credit risk management in banking line. So fortunately or unfortunately, most of those credit management positions are actually based in KL, okay, and not in Penang. So it took me quite some time and I couldn't get any job. That's when I landed myself as a financial planner, which is actually insurance agent, right? Back then I didn't even know that financial planners equates to insurance agents. So I was thinking, hey, since I've got spare time on my hand, why not just do something with it? That's when it actually opened up my eyes to a way bigger world out there. I get to meet up with people from all walks of life, and I got to meet up with many successful MDRT, top of the table insurance agent, and how they actually lead a very wealthy lifestyle, you know, after they have attained success in their career, and then they begin investing into real estate and stock. So there was this particular MDRT. I think he's not only MDRT, he could be top of the table. He has got his own agency. He actually grew, used the platform of an insurance agent to earn his income, but then he used his income to actually reinvest into real estate all over Asia in order to grow his wealth, and also into stock market. So when you read about someone's biography, you know, how they attain their wealth, it seems that a bit far-fetched, right? Anyway, we don't really know this person in real, but when you get to know a person in real, I mean a real person, and you know how he grow his wealth, then it actually strike you more that, hey, this is really a way that can be done in order to attain the wealth. So that's when I actually made up my mind that I want
do it! Just do it!
to also carve out a path for myself, a path to riches through the right way, which is I want to learn about investment, property investment and stock market investment. Since I'm not so good when it comes to business, right? Not everyone can become a business, so why not just invest into other people's business through stock market, right? So that's when I started to immerse myself with many property investment books and also stock investing book. So as I started both the investment in property and also in stock market, I realized that, hey, stock market is lacking something which is called the leverage. That means if today I have got 100,000, I can only invest 100,000. Unlike real estate, if you have got 100k, you can actually invest into a 1 million property. So there's this lacking in leverage factor, which I find that if let's say we can also leverage on stock, then of course the return would have been amplified, you know. So that's when I got an invitation, I think through email, asking me to attend a preview where there's actually a way for us to leverage even in when it comes to stock investment using CFD. So this got my attention and I actually signed up to attend the preview. So when I attended this stock investment preview, it says that there is this product where if we use it, we can actually leverage on it. It's called CFD, Contract for Difference. It says that if you open up an account and trade using CFD instead of trading the normal stock, they will actually give you a margin where something like if you have 1,000, you can actually trade up to 10,000. No, that means you can leverage lah. The exact equation I've forgotten, but I know that I can leverage on the money that I have. That means 1,000, I can maybe buy 10,000 worth of stock. So it got me so excited, you know. But unfortunately, I did not actually get to know the full picture of it. So I opened up this CFD account. It was based in Singapore. I remember I traded this which stock that I traded? It is
Eternity later.
I remember I traded in Genting, Singapore, because I have faith that the Genting, Singapore, that time the stock was just public listed not long ago. So I have faith that the business will pick up, because anyway a lot of Chinese, they love to go to Genting, Singapore for entertainment and also for the gambling activities. So I have faith that the price will go up. So I actually used the CFD to trade for Singapore Genting stock. So there was this day, I was on Friday, okay, the price actually went down. So when it comes to CFD, even though they give you margin or leverage to trade more than what you have, but when the stock drop, right, when the stock prices drop, they also expect you to go and cover it ASAP. Okay, so unfortunately on that day, it was a Friday, I received email, it was in the evening, to say that this particular stock that I hope has dropped in prices, so I need to go and top up. So everyone knows that in Malaysia, our bank they don't work on Saturday and Sunday. Unlike in Singapore, they have Saturday banking, they have Sunday banking. So the earliest I could actually go and top up would be on Monday morning, right? So I replied to say that I'm going to go and do the top up on Monday morning because the bank was not open on weekend. I did not get any reply. But on Monday morning, I just get a reply to say that they have fully sold off my CFD stock for Genting Singapore because I have failed to top up. Hello, that was just Monday morning, which I already emailed to them to say that I'm going to top up on Monday morning, but they just force sell everything that I have inside there. So overnight I actually lost almost 100,000. The exact amount I've forgotten, but I know it's almost 100,000. I was like, no. And there's nothing much I can do because they are located in Singapore. Then later years, a few years later, I got to know from one of my friends that actually this kind of CFD is not so much regulated. So most probably why they force sell your CFD stock is in the first place they may not have bought the stock for you at all. So through doing that, actually they just got free money from your account. So it makes sense to me. So after that, I tell myself if I ever want to invest in stock, just invest in the proper platform. Just invest using cash. Okay, don't invest using whatever CFD, or maybe in the later part they may come up with other names but with similar function. Just stay away from it because they are not regulated. Okay, so when they are not fully transparent and not fully regulated, we are always at the losing side. So one good thing is that I incurred that loss when I was still young, in my early 30s. So it was a good lesson for me, and I actually stayed away from stock ever since that incident took place, and I fully focused on real estate investment. So thank God, even though I've lost more than almost 100,000 in trading stock using CFD, contract for difference, but all these losses I actually make more than that through my real estate investment. So at this point of time, I know that in the market now, there are still CFD that exists in the market. So for you guys out there, for your benefit, please stay away from it. Okay, it is a double-edged sword, and we are most likely at the losing end as compared to the player. We are the player, and I would say that the operator of CFD is the banker. The player is always at the losing side when it comes to CFD. I have experienced it myself, so my advice to you is stay away from CFD. Even though it may look attractive because it gives you leverage, but don't forget it is a double-edged sword. It will also make you lose everything just overnight. Okay, so after that incident, I stayed focused 100% on my real estate investment and also my real estate career. So it did pay me off handsomely, apart from the worst property mistake that I've made. Okay, so throughout this property investment, I would say I did make mistake as well. But when a mistake you make in property is way kinder to you as compared to the mistake that I made in stock market. In stock market, I just lose everything, more than 100k. But when it comes to property investment, even though let's say I have bought the right property but at the wrong market timing, I can still sell it off but at the way lower price, but I just break even instead of making a profit. So maybe I just lose in the effort that I put in or the time that I put in. But when it comes to monetary, I did not lose. The worst is break even. I have never lost money when it comes to property investment, except for the abandoned cases. Okay, and for the abandoned case, like what I shared earlier, they have also found a white knight to rescue this investment. It's just that we have to continue to give them another 4 years from last year complete the whole thing lah. So property mistake is more I would say how to put it property mistake is not that harsh, but stock market mistake it can be very, very harsh. So usually for a beginner, I will always advocate for a beginner, especially if you are still very young. Just start with your real estate investment first. Start to invest in the place where you know best, in the market that you know best. Start off with a area that is nearby to the place that you live in, or the place that you work in, where you know whether is it a good place to live in that area. Is there a demand for rental? A place that you know best. Okay, start with that. Then once you get more and more confident, and you can start to actually branch out to bigger and wider area in terms of geographical. Okay, and also start small, as in start with a lower price investment first when you are still a beginner. Don't first start go and buy above 1 million property, because there are a learning curve that you still have to go through for yourself to be comfortable with it and to know your own risk appetite before you adjust and get to know yourself better. And then you know that if your risk appetite is not that high, then probably you just focus on residential property investment. Later part, if you think that your risk appetite is actually bigger, then you can actually widen your property investment portfolio to include commercial. And there are even those who are familiarized with industrial property. Then if you are familiar with this industrial property in terms of the market trend and also the market supply and the market demand, then of course you can go in as well. Like for myself, I'm quite a conservative person when it comes to investment, and I'm not that. I would say that my risk appetite is quite moderate, not to the extreme high and not too low as well. That's why property investment suits me well, and so far I have only looked into residential. Okay, so maybe some people ask me, what's the difference between investing in residential and investing in commercial? Okay, which I'm going to share now. As a beginner, for when you want to invest in real estate, I always advise to go and invest in residential first. Why? Because every one of us need a roof above our head. So it's actually a basic needs for everyone, regardless of whether the market or the economy is doing well or not. People will still need to have a roof over their head. So the demand for rental will always be there, and the demand for own stay will always be there. It's just a matter of pricing. Is it a high-end residential, middle-end, or lower-end? So from my past experience, I say to be safe, always invest in the middle market, which is the mass market. Okay, middle market, which means is average income family, where most of the Malaysians can afford and would like to stay in. Be it for rental, be it for own stay, be it for rental purpose when you buy it, or be it for flipping purpose that you have in mind when you buy it. Always focus on the mass market segment. Okay, mass market segments is the safest. Okay, lower end residential, if let's say you say like those low cost flat, the rental yield can be quite high, but ask yourself again, are you able or comfortable in dealing with this kind of tenant? Because they are not easy to deal with, and there's a different way that you need to different skill you need to deal with them. But if let's say you are just comfortable dealing with people like yourself, myself, mass market is the best. Okay, mass market are people who are mostly educated, they have got a decent income. It's just that maybe they are not able to buy it. Maybe they just started working or started their family in the first 1 to 3 years, so they may want to rent from you. Okay, high-end market, usually when the economy hits, the high-end residential market will actually get it first, because high-end market usually targeted mostly towards the minority wealthy people and also foreigner. So when you say wealthy people, they have got, what they have is money. So to them, when you have a lot of money, you have plenty of choices. Okay, so when it comes to demand and supply, most of the time supply is more than demand, and they become the king to choose where they want to buy and which property, which high-end property they want to buy. So if you are the seller, the bargaining power is not at your side. But when it comes to mass market, usually the supply and demand, sometimes when it comes to different property timing, different property cycle, like now is the buyer's market, of course the supply for mass market will be higher. Demand may also be there, but maybe slightly lower, okay, as compared to higher end. When the economy hits, the supply usually is way higher than the demand. The demand would drop. But low mass market and the low end market, the demand is always there. It's just that the payment may not be, if you want to rent it out, the payment may not be prompt, because they will always be in and out of job. They may not even have money for the next month to pay it to you. So you always have to have a very high turnover when it comes to tenant, and you have a lot to manage when it comes to chasing for your rental payment. Okay, and sometimes if let's say they get harsh, they get rowdy, you don't even know how are you going to cope, especially if you are a lady. So maybe the low-end market, you may want to leave it to those guys, investors. Like us lady, we just focus on the middle-end mass market. I think that would be the safest when it comes to residential. But eventually, if you find that your appetite is actually way bigger, you want to start to invest in commercial. Commercial, of course, the rental yield and the capital gain would always be way more than residential when the market turns up. But always remember that commercial investment requires you to have a very deep pocket, because commercial shop lot, let's say for a commercial shop lot, it always requires time before the area will actually boom up. Take for an instance like Auto City, Icon City, very one of the hotspot in mainland, right? But do you know that it also took about minimum 2 to 3 years before the whole place is boom up? So imagine if you to buy into one of the shop lot at Auto City back then, and you need to wait for about 2 to 3 years before you have got a good rental yield or rental returns on your unit. But during this time, you do not have the money to service your monthly installment. What do? Most of the time, if you caught yourself in this situation, then you would have to force to sell off your property at way lower prices, and some may even get into denial. They wouldn't want to sell it off due to the asking price was not that high, the selling price was not that great, and then they waited until their shop lot is being foreclosed. Then it is even worse, as in it will result in you having a secret record in the bank, and then in future if you want to take out loan again, you will have a problem, right? So that's the pitfall of investing in commercial shop lot. Always make sure you have got deep enough pocket to last for at least about 2 to 3 years before you can expect this shop lot to actually boom up in terms of rental yield, and also in terms of selling prices. So that's actually one of the easiest way for property investment. If let's say you are an investor who is like your risk is moderate and you wouldn't want to have so much of work to do, there's actually one type of property that you can consider to invest in for long term. When I said long term, it's like in the region of 10 to 20 years. You can always consider to invest in single story landed property. Okay, you will not go wrong in this, even though the appreciation is not very high, but it is steady and stable and surely go up. I'm going to show it to you. This is actually a case study on one of the single story in Penang Island, how the price of this landed property has actually grown in the past 30 years. So imagine if you have bought one of this property 30 years ago, not you, I mean maybe your parents, without doing anything, just rent it out. 30 years later, you would see that this property would have more than tripled the returns for you. So this is one of the lazy way for property investor to invest in. So what about stock market? Okay, from my past experience, I said earlier, after the CFD incident where I've lost over 100k. After that, I stopped. After that I totally stopped in doing stock investment. But lately, I have started stock investing again due to crisis which took place about 3 months ago. I'm sure it's still fresh in everyone's mind. 3 months ago in March this year, most of the global stock market actually took a tumble down more than 20-30%. So this time I saw it as an opportunity for me an opportunity amidst the crisis, and because I'm well prepared, so this time I decided to invest into US stock market, and this time I'm wise. I have grown wiser. I use hard cash to invest into stock market. So from my experience in investing into stock market, first, always use hard cash. Second, always invest in the traditional platform. Ignore whatever new platform that come out to tell you that you can save on stamp duty clearance and all that. Just ignore it. As long as the platform is not fully regulated, it's not transparent, please stay away. What I have gathered from stock investment is that do not try to time the market. Stock market is not like property, where property you are able to time it, the cycle, you are able to time the cycle pretty steadily. But when it comes to stock market, in the short term, it's always super volatile, up down, up down, up down. So when you want to invest in stock market, we must invest with a time horizon of minimum 5 years to 10 years, and invest in a company where you have done your homework and you know that this company, the business concept is good, is thriving, and is scalable. Okay, and you trust, you have full faith in the leader who is leading this company. Just like Amazon, just like Facebook, you must be able to understand the business model before you invest into it. So later I'm going to show it to you. If let's say more than 20 years or 30 years ago, if you have invested into Amazon, your returns would have been wow, more than 100, 200, 300, 400, 500% return, more than that, way more than that. And if you have invested into Facebook like more than 5 years ago, your return today will be fivefold and more than fivefold. Okay, I'm going to show it to you shortly after this. Okay, over here we are looking at the Amazon.com stock prices, at the historical prices since the IPO 1998 all the way up to now. You look at it, the chart is actually trending up. This Amazon, if you were to buy in the 1998 and you just close your eye, after 20 years, this is the price that you're looking at now, US dollar 2008. Last time was below 100 US dollars. This is long term, okay? But if you to look at short term, the stock prices always zigzag, very volatile, up, down, up, down, up, down. So if you want to invest in stock, you must always have a horizon of like 5 to 10 years instead of trying to time the market, and start it off the next week or the next month, because the volatility in the short term is very high. Imagine if you buy in February, it went up, then after that it actually come down in the following month, March, and then come further down, and then you got desperate and you just started off, then after that you realize 2 months later it actually went up again. Okay, so actually a lot of people got trapped and lose out in stock investing due to they are always trying to time the market, and they always try to be like a trader and speculator, buy now and then weeks later they try to start it off, instead of having a long-term horizon. Why does this happen? Most likely is they don't even know why they buy into this stock. It's more on the speculative nature. Okay, and Facebook, like earlier I said, last time when they went IPO, the price was like around US $40. Okay, then you look at it now in the long term, as of now, yesterday 233 US dollars. But if you look at short term, like 6 months time short term, you can see February, if you buy, when it comes to March, you actually tumble down. So if you're someone who speculative investors, stock investors, you buy into the Facebook stock without understanding the underlying fundamental of Facebook, without understanding the business nature, the business concept of Facebook, definitely you will be panicked when the price just tumble down. You would have no faith that the price will go up again, and you usually sell when the price is at the lowest, and then as it climb up again, you usually try to buy when the price go up to the peak with the FOMO inside you, fear of missing out. So even if you look at the S&P 500, okay, if you look at short term, like 6 months time, the price always go up and down, very volatile. Okay, in the span of February, it went up, then March come down, and gradually go up, down, up, down. But if you are able to hold it for medium to long term, you can see that S&P, the price, the trend over the long run is always trending up, like since 1948 until now, it has actually gone up by so many hundredfold. Okay, so a conclusion that I derive for investing in stock is that first we must understand the stock or the business that we are investing in. It means this particular stock that we're investing in, let's say like for Amazon, we must understand what is Amazon doing, what is their business structure. Do you have faith in their business concept? Do you think that their business is scalable? If the business is scalable, means that they are able to actually expand their revenue. Okay, so if you have faith and you understand their business model, then only you invest in. Because if you invest in a company where you understand their business concept and you have faith in their business concept, even when the price comes down to you, it will only mean that now this same business has become cheaper for you to acquire, and you will actually buy more instead of just sell it off while you are panicking due to the price drop. Okay, so one thing that I learned for stock investment is we need to hold it medium to long term and be prepared that in the medium, and be prepared that in the short term, the price is always very volatile, and it only represents opportunities for us to even buy more if we have more funds when the price dips in stock that we understand the business model. That is the way for us to invest when it comes to stock. So that was about stock. So when it comes to property investment, like what I've said earlier, property investment is way more predictable. So if we want to be able to be a better property investor, as if we want to see a greater returns in our property investment portfolio, it's very important for us to time the cycle, okay, time the market cycle when it comes to property investment. So how do we do that? Okay, I'm going to reveal to you one easy way that you can start with right away. Actually, there is this very easy way which I have documented down over here, where I will walk through with you where our property market is currently at, and where it will be heading to in the next 3 to 5 years, and when will be the next property market boom, and also when will be the next property bust. I hope by walking through this with you, it will give you a better imprint in your head what you should be doing and what will be your strategy in the next 3 to 5 years from now on, if you want to start, if you are ready to start to invest into property market now. Hi there, welcome to UNCB YouTube channel. Today I would like to talk about one of the most important topics for every property investors, which I think they should know and master it in order to excel in their property investment journey. What is that, you may think? Okay, I know that when it comes to property investment, the top one fear of every property investors is that, hey, after I've bought these properties, can these properties be easily rented out? Would there be demand for rental? And would there be demand if I want to sell it off? So that's why today I'd like to actually share with everyone one of the most important factors when it comes to property investment, which is we must know when is the right time to buy, what kind of property to buy, and when is the right time to sell. there is actually an art and science when it comes to that, which I'm going to dive in right away. So if you are able to stay with me throughout the whole video, I can assure you 101% after the end of this video, you will definitely be one of the above average property investors which are able to time and know which is the right time for you to enter, which is to buy, and which is the right time for you to start it off when everyone is buying. Okay, let's come with me and dive in right away. Hi, so today I'm going to share with everyone how to know when is the best time for us to sell our property and when is the best time to sell. Okay, if those of you who have not known me, actually my name is Ewan. I have been in this property industry for the past 12 years. I started off as a property investor right in the year of 2008. So that was, if you all were to recall, that was during the subprime mortgage in US, which affected the housing industry tremendously in US, and also the domino effect into our Malaysian property as well. So today, after I have looked back and recalled the whole property cycle that I've been through, I am able to actually share with everyone here. It's actually very important to know when is the right time to buy and when is the right time to sell, and actually there is an indicator for us to do that. If everyone thinks that this is actually one of a very important topic for every property investors to master and to know, I would appreciate that if you all can just click a like, that YouTube will be able to share my video with more and reach out to more people like you. Okay, now let us look at the chart here. The chart over here is showing us that actually understanding real estate cycle is very important, because by understanding and mastering the real estate cycle, we would know when is the best time to enter into the market and when is the right time to actually sell it off. Okay, as you have a glance over here, you know that our real estate cycle is actually made up of 4 phases. Okay, the first one is recovery. Then the second one is expansion phase. Third one is hyper supply, and the fourth one is recession. So I will actually go into details each and every phases. What are the telltale signs showing in the market, so that we would know that which phases we are in the market at the point of time or currently, so that we know what are the actions that we should do as successful real estate investors. Okay, let us start with the first phase, which is recovery. Today, if you want to know that whether our real estate has entered into recovery phase, look at all these telltale signs over here. Okay, when our market has entered recovery phase, you will see that our government will start to do a lot of intervention, like Bank Negara announced OPR cut rate to lower the overall interest rate, and the bank would also relax in their financing approval. You will see that the rejection rate, the rejection rate for loan application would get lower and lower, and then with this lower interest rate, it will also translate to cheaper financing costs for business people. So business people will start to expand their business, and they will start to buy machineries, because it's now way cheaper to buy machineries, and they will start to open up new offices, and new business opening will start to mushroom out, and all this would actually result in higher demand for property, be it for rental, for residential, for shop lot, or even for offices. So definitely it would definitely then result in the vacancy rate for the property to start to drop, and the demand start growing. So with all this demand start growing, be it for rental or be it for sale, it will actually absorb all the previous unsold or overhang inventory in the market. So this will result in the inventory to become lesser, and eventually lesser and lesser. So if you were to see that all this telltale sign is happening in the market, definitely we will know that our market is in the recovery phase. Definitely we will not be able to see everything, every point of this to actually happen at the same time, but probably a few of it might happen first, and then it will actually continue on with the rest. In my opinion, like in the recent January this year, even as far as last year December, and then January, and then March, okay, we have seen that our Bank Negara has actually reduced OPR rate a few times, and currently our OPR has actually dropped from 3.25 to all the way to 2.5 as of this point, which is April. And we foresee that Bank Negara is going to do a further OPR cut by another 75 basis point. This is because the government, they know that due to the current COVID pandemic, is going to cause a major meltdown in our economy, depending on how long this COVID pandemic is going to last. So the government is taking a proactive action to introduce these intervention measures. Okay, but of course, as long as if this pandemic is still here, no matter how low the interest rate the government is going to give, the consumer is unable to go out there and spend, right? Because all of us have got to be confined to our home. So pretty much, if we want to look at how fast our market will get to recover, very much depends on how long this current COVID pandemic is going to last. Okay, then when it comes to expansion phase, what are the telltale signs in the market that will be telling us that we are in the expansion phase? You will see that our housing price start to recover and eventually grow higher and higher, and vacancy for properties will start to drop. That means owner will be able to rent out their properties easily, faster, and they can even command a higher rental. Okay, buying demand also start to creep in, because as consumers see that the housing price starts to recover and get higher and higher, they always will have this fear in them that if they don't buy now, they may not be able to afford it in near future. And definitely, developer would also want a piece of the cake. They will start to submit for building permit approval for new construction, and then you will start to see more and more developers will do a lot of property launches. In the media, you will see that there might be news publishing to say that there are people who actually queue overnight outside the developer's office even before the office are open. Some even engage or employ bangla or foreigner to help them to queue, so that to make sure that the next morning they will definitely have a chance to at least grab a unit from the new property launch. So we get to see more and more money will be pouring into the property market, and then more and more people will start to chase to buy property. Even people who have not bought property before will also start to get into property. The market will be in a frenzy, and everyone will just be talking about buying property and becoming the new and next landlord. And definitely, eventually, you will see that our property prices will actually rise up to another new level. Okay, when we see all these telltale signs, the market is telling us that hello, we are already into expansion phase. So once if we are into expansion phase, I would say for myself, in the past 2008 mortgage crisis cycle, I sold off most of my investment property during this phase. Why? Because when I see that the property prices actually double up, and when the market is behaving irrationally, I know that the market could have peaked, and if let's say I don't sell it now, I may face the next downturn, which is where the market will actually tumble down. Okay, so I actually sold off most of my property during the late to middle expansion cycle. Okay. Then it comes to hyper supply phase. Hyper supply phase will start to happen when you see that there are more and more supply of rentals coming into the market. More and more owners want to sell their properties. Those who bought from developer under project, under construction property eventually is being completed, so they actually buy it with the intention to flip. So you will see more and more buyers trying to upload their properties into the market to sell it off. Then eventually, because of more and more supply coming in, rental might be able at the initial stage might still be able to grow a bit, but at a very slow rate. And then eventually, as more and more new supply pour into the market, this will result in the market going into hyper supply, means supply overtakes the demand. That is when we see that the rental and property prices slowing down and eventually start to decrease. And we also start to see our government introduce cooling measures, because when the government knows that the bank has been approving many bank loans, and many people are getting into the real estate, buying real estate, they would actually have this fear that the property market might actually go into overhype and might cause it to have a bubble burst, just like what happened in US during the subprime mortgage. Okay, so they definitely would have to normalize and balance up the market by introducing cooling measures. So what are the types of cooling measures that our government has introduced in the past market cycle? I remembered our government actually introduced real property gain tax, RPGT. They actually increased the RPGT to 30% for the first 3 years, and then they even reduced the loan to value for third property from 90% to 70%, meaning that if today you are buying the third properties, you can only get 70% mortgage loan maximum, and you have to come up with more down payment. And of course, Bank Negara also increased their OPR rate, which translates to higher mortgage interest. So eventually the market would also crash. Crashes means when more and more buyer want to, more and more owner want to sell it off, and more owner want to rent it off, but there is no demand to absorb all this supply, the market would have to crash, meaning that the rental would have to come down. There will be some owners who are unable to continue to service the monthly installment, where they will have to force sell their property at a way lower crazy prices, and some would start to default on their repayment to the bank, and the bank would have to foreclose their properties, and you will see that more and more auction properties coming into the market. Okay, that's when recession would eventually hit, when the vacancies start to exceed the long-term occupancy average. Okay, and then that means the economy will turn bad, and it might result in higher unemployment rate, okay, and decrease in consumption by household due to they have lesser spare cash to spend due to higher financing costs, higher mortgage interest rate, and then companies will also decrease in their new spending, because now the financing become more expensive, financing costs become more expensive. And you also start to notice that the prices of raw land would actually reduce a bit at a very slow rate, and the bank non-performing loan would start to increase more and more auction properties will come into the market. Now you see all this telltale sign, probably might not be all of them, but a few of them is telling you that our market has entered into a recession phase. Okay, so some might ask, hey, when we are in the some may ask, when we are in the expansion phase, right, when the developer knows that there is actually more demand than supply, wouldn't the developer come up with the supply in order to counter the higher demand? That's the beauty of real estate, because all of us know that the process from a developer, from applying for the building permit until the day when they start the construction and they complete and deliver the project, it might easily take them 4 to 6 years. Okay, this actually also translates to before any new supply come into the market, the market might have to wait another 4 to 6 years. Okay, so that's why real estate investment is easier to play with, unlike stock, where stock changes very fast. Real estate gives the buyer or give the investors more time to react to the market. Okay, so For myself, I will always think that real estate is one of the best investment in the world. Not only it allows us to leverage by using other people's money to buy, but it also gives us more time to adjust to the changes and the shift in the market. Okay. Okay, another thing I would like to highlight over here is that last year our former Prime Minister, Tun Dr. Mahathir, he has announced that Malaysia would actually revise and shorten our building permit approval from previously 390 days, which is about 3.5 years, to a short 90 days. That means next time when developer were to apply for permit, okay, to build houses, they no longer have to wait 3.5 years for it to get approved. They can actually get the approval within 90 days. So this is a cut of about two years, or I would say about 2.5 years. It will shorten. In other words, this will shorten the expansion phase of our next cycle. So when it comes to our next real estate cycle, we can expect that our expansion phase would actually be cut. Actually be shortened by about 2.5 years. Okay. So over here, I would like to show you all that this is our housing index growth. You can see that from 1990 until 2019, the growth of our property prices in the past in the 1990 was a bit high, about 20%. Then after that, it actually dropped. This was during the 97 financial crisis, but it dropped within 40%. Then after that, it went up to more than 40%. Okay, so this tells us that as long as if you have got holding power, that means when you buy, you actually make sure that your cash flow is very good and you have got an extra cash to always speed up with your contingency use. You will definitely be able to weather off any of the property crisis, because eventually the property price would definitely rebound, and it would usually rebound higher. Okay, people will only be forced to sell it off over here if they over leverage and if they actually buy it during the peak. Okay, and then after that, ever since year 2000, our property prices has been actually growing up to even as of 2019. You can still see a very small growth over here. So if we were to see it in more detail, you can see that in July 2017, our property price did grow about 6.8%, then slowly decreasing 6.5, 6.1, and all the way to, as of last year, only 0.4. So you can see that actually our property market prices has actually been on the downtrend for the past about 7, 8, 9 to about 4 to 5 years. Okay, so it's time actually for the market to rebound, if not because of the current COVID-19 pandemic. Okay. So over here is just a snapshot of walk down to memory lane for our housing market from 2002 to 2020 as of today. Okay, so you can see that in 2002 to 2008, 2009, our property market was actually under recovery phase, and this recovery phase has been extended so long because there was a mid-cycle dip caused by the 08 US subprime mortgage event. Okay, then ever since 2009 onwards, 2010, our property has been on expansion phases. In KL, the expansion phase actually stopped somewhere in 2013, but in Penang, it actually stopped in 2014, late 2014. Then 2005 start to come down all the way due to hyper supply phase, and then eventually, as more and more completion coming in, it caused an over supply where the supply exceeded the demand, where eventually we actually came down into recession. Somewhere for Penang will be somewhere in 2017 to as of now. Okay, so you can see that as a property investors, you always want to sell before hyper supply kicks in, or even at the start of a hyper supply. You definitely would not want to keep on buying at this top of the expansion phase, especially project. You try to avoid to buy new project at this during this end of the expansion phase, because you would know that it's going to get into hyper supply eventually when upon completion, and definitely you'll be actually in the wrong cycle for you to even rent it out or sell it off, because the market rental demand would have reduced by a lot, even by the demand for buying would also have reduced by a lot. So people who actually bought here new project, they would actually caught themselves trapped in the hyper supply phase, and eventually all the way down to current recession phase till now. Okay, so for myself, I actually sell off most of my properties at the second half of the expansion phase, when I see that the market is behaving irrationally, okay, and the prices has doubled up. Okay, so today, as what I've explained earlier, definitely all of us would know that where is our property market right now, right? I would say currently our property market is actually about to go into recovery, but has been stopped by the COVID-19 pandemic, because we see that our government has already started interventions as early as late last year, December last year. They cut down the OPR rate, and then January they cut out by another 25 point basis, and then March last month another 25 basis, and we foresee that they are going to cut furthermore in the near time to come. And you also see that the bank is getting more lax in their approval. But all this currently cheaper financing costs are unable to let any companies to start expanding and doing all this due to the COVID-19. Everyone is confined at home, and even companies have to shut down. So due to this unexpected pandemic, we can foresee that our recovery period would actually be prolonged and may take a longer time before it would get into a full recovery mode. Okay, currently we are just about to enter into recovery. So I would say we are still in recession, about to enter into recovery. How soon we can enter into a full mode of recovery depends on how soon this COVID-19 pandemic is being tackled. So to you, when is the best time to buy? Definitely I would say after I've gone through the whole cycle with you, you would definitely now you will say that it's recession and recovery phase, right? And then what did I say earlier? Currently, actually our market is actually hovering around recession and recovery phase. So that means that now is actually one of the best time for us to go and buy. Okay, but what should you buy? Like currently we are actually in between recession and recovery. Okay, so when we are at the early recovery or at the late recession phase and early recovery phase, is always good to buy new projects. Why? Because we all know new project needs time to be completed, minimum 3 years. If it's a mixed development, it will take 4 years. Okay, by then it is completed, you will find that even if you buy here, or at this stage, when it's completed, it will be somewhere here where we are entering the expansion phase, somewhere here, where you can, upon completion, you can flip. So you can see in the past cycle, people who buy new project during this time, recession time, and this time, when it's completed, they are able to actually flip. Even those who compress new project, like they at one go they buy 4 or 5 units, they are able to compress the loan and flip it over successfully. Why? Because they bought it at the right phase, at the right cycle. Okay, but when we enter into the early phase of expansion, we can still buy, but this time please don't buy new projects, buy sub-sale. Sub-sale means secondary market where the property is already completed. Why? Because the property already completed, and 1 to 2 to 3 years you still have time to actually sell it off, because usually during this time the the government might still charge a very low RPGT. So even if you were to sell it off 1 year later, the tax that you have to pay might be still very low, like 5% in the past. Okay, definitely do not buy new project when you are entering into expansion phase, especially at the second half of the expansion phase. Because once you were to commit to buy a new project, if 3 years later upon completion, you might find yourself being caught in the hyper supply phase, where the rental demand will start to come down. Okay, the selling price will start to come down. Okay, as if you want to become a successful property investors, always apply a contrarian strategy. When the whole market is buying during this time, please sell. When the whole market is not buying, is shying away, please buy. So these are also the strategy that I applied in the previous market crisis, real estate crisis, which actually got rewarded handsomely due to this strategy that I applied. So today I'm actually sharing with everyone over here. I hope that you all will also be able to actually profit from this current recession crisis cycle. Okay, so sell even if you find that yourself is caught in the early stage of hyper supply, can still sell as long as you're not making a loss, because you know that there is a long downhill in the future in front of you. Okay, so after watching this video, I'm sure you will also concur with me that real estate investing is definitely way easier than stock investing, right? So it's way easier to master and way easier for us to also profit from real estate investment. How do you do that? Easy. The first step and easiest step is just to subscribe to my YouTube channel and also click on the notification bell. I will be sharing on an ongoing basis the market trend of our local property market, as to when our property market is in buyer's market, when it's going to turn into seller's market, and when it's going to go into explosive, and when it's a warning sign or red flag for us to start selling off, and when it's a good time for us to conserve our cash, and when it's a good time for us to go into the property market again. Same for stock, as and when if there's a crisis, if I think it's good for me to go into the stock market, I would also share. Of course, all this is all my sharing. I hope that you all can just use it just as a guidance, but it's not like I'm asking you to go in and invest in whatever stock that I invest in. It's also not that I'm asking you to go and invest into property if you are still not comfortable with it. Okay, so how do you get yourself comfortable? Firstly, get yourself educated in the subject that you want to explore. If you think that you want to start to explore, become a real estate investor, get yourself educated in the property investment area. If you think that you want to start to explore to become a stock market investor, get yourself educated in the stock investing area. Once you are in the know, the fear will actually leave you and you become better and better with baby steps as you start out. Okay, so I hope today through my videos you guys will get to know me better, and I also hope that you all would also continue to grow with me in both my property and also stock market investment. And I also hope that you guys, if you have any comments that you would like to share, feel free to comment down here, because this is actually a platform for all of us Malaysia to exchange ideas and also pointers when it comes to investment, be it in real estate or be it in stock market. Okay, so with this is my sharing for today. So meantime, you guys stay safe and also happy investing, and as always, invest safe. Bye.